Additional issues concerning property management agreements. Brokers may include other items in a property management agreement or in an addendum, including any of the following: varying rates of compensation, specifically the commission rate when a tenant occupies the property and a different rate, if any, when the property is vacant. More specific obligations that the licensee will have in the event of certain occurrences. Examples: eviction of a tenant, failure of a tenant to follow rules, laws, or statutes, the tenant's violation of HOA rules, or breach of any crime-free addendum agreed to by the tenant. Emergency actions to take if there is damage to the property or the property becomes uninhabitable for any reason. More specific guidelines as to which bills, invoices the property manager will pay, and which ones the owner, landlord will pay. In most cases, the property manager will pay vendor invoices and local charges, and the owner, landlord will pay the mortgage, property taxes, city rental and/or sales tax, etc. Disclosures to the landlord of their obligation to uphold any regulatory or statutory rules, such as registering the property with the county, disclosing any environmental or condition matters to a tenant, federal or state tax reporting, etc. Disclosure to the owner by the property manager of the timing for them to expect their money every month. The landlord should agree to the broker's policies on the length of time the broker will hold the tenant's checks and the time it needs to process and mail payments. In most cases, an owner living out of state might need to wait several weeks before receiving payment for the current month's rent. That should not be a surprise. It should be clearly spelled out in the property management agreement. Authorization by the owner to the property manager to do various functions, including signing all the listing documents, the lease, and all supporting documents, to initiate and follow through on notice to a tenant of the violation, a notice of intent to evict, eviction, etc. If an attorney is needed for eviction or other legal functions, the property manager should have the authorization to spend a reasonable amount of money to hire an attorney, file notices, etc. We will spend more. It is a suggestion and a good idea to make the owner aware that the broker will need time to process funds owed to the owner. The Arizona statutes do not require any specific amount of time or disclosure to the landlord on how long it will take to process payments. That aside, most broker property management agreements, as well as the AAR version, have a section telling the landlord on what day of the month the broker will disburse the funds to the landlord. Any broker of a large firm that handles property management knows that this is the source of many complaints, how long it takes for the owner to get their check every month. If the management agreement says that the broker will disburse by the 7th of the month or the first business day after that, the broker should do everything possible to reach that goal, keeping in mind that it takes time for mail to reach an out-of-state owner. There may be electronic means to speed up the process, such as sending monthly payments to the landlord via wire or ACH deposits. Here are some common questions and answers relating to the property management agreement. Can a property management agreement be for several properties that the owner might own, or does the property manager need a separate agreement for each property? The Arizona statutes do not answer this question, thus the decision is up to the broker. For practical purposes, the AAR Property Management Agreement has a section for the address and description of the property, so one might assume that AAR is suggesting one property per agreement. If a typical owner owns 1 or 2 properties, that is not a burden. When an owner or an entity owns multiple properties, sometimes into the dozens or hundreds, it would be a challenging task to prepare that many property management agreements for the client's signature. The broker could have a policy that if the owner owns more than 5 properties, they could require 1 agreement for every property, and for any ownership above 5 properties, they would draw up just 1 agreement with an addendum identifying each property. If the broker takes 1 agreement for an owner that owns 11 properties, all 11 could be identified on an addendum. If that changes for any reason, meaning the owner sells 1 property or buys an additional property, the parties could easily update the addendum. The answer is no. There is no separate license or modification to the standard real estate sales or broker license. Nevertheless, we strongly suggest that any licensee who wants to branch out into property management seek and attend additional classes specific to property management. If the owner wants to sell a property that a licensee is currently managing, may the licensee list the property, or would that create a conflict of interest? There would not be any conflict of interest. A property manager would be able to list and sell the property. Can a property management agreement be for an extended period? Or do the Arizona statutes limit the term of a property management agreement? There is no statutory limit on the term of a property management agreement. As with any other contractual agreement between a broker and a client, the length of the term is fully negotiable. Some brokers write in a default term length in their custom property management agreement, such as in the example below. This agreement shall be for a term of 5 years, commencing on Ta'ayao and ending on Tapao and Bam. Such terminology would be perfectly acceptable if the owner agreed. The default boilerplate could have a specific term as shown above, or it could be blank. Again, this is negotiable. Could a property manager have a team of people and delegate certain management activities to different people? Yes, the property manager could have a team and delegate to others, as long as the following occurs. Anyone accepting delegation is a real estate licensee and holds a license with the same broker as the property manager. If a team member is not a licensee, such as someone who answers the phones or does clerical work, Arizona statutes severely limit that person's role in assisting a property manager. The broker discloses the delegation to the owner, telling the owner the name as of the person as on the team. The delegation of signing checks for the property management trust account must be in accordance with the rules and statutes regarding broker delegation and trust accounts, such as ARS 32-2174 and other Arizona statutes that cover property management. For further financial security, the property manager and/or the owner could require that there are 2 signatures on every check at all times, or 2 signatures on a check above a certain dollar amount. Like any other business relationship, it sometimes happens that one party wants to cancel the agreement. Regarding property management agreements, ARS 32-2173 requires that a property management agreement contain a cancellation clause that is agreeable to both parties. The AAR agreement has a default of 30 days notice. Yet again, the amount of notice time is not required by statute, and the amount of time may be as short or as long as the parties agree. In most cases, 30 days is a common choice. Once the cancellation is noticed, by statute, the property manager must provide specific documentation and accounting to the owner within a prescribed amount of time. Within 5 days, the property manager must provide a list of all tenant security obligations, meaning how much money the landlord or the manager is holding as security deposits for each tenant. After that, within 35 days, the property manager would need to send any money remaining in the property management trust account, except for any obligations that would be forthcoming to pay vendors, contractors, etc. Then, by the 75th day, the property manager must provide a final accounting and send the remaining funds to the owner.